listening or watching Radio Afinju. The time is 10 a.m.
Ẹ bá mi pè o. Àfínjú. Kí lorúkọ rẹ̀? Àfínjú. Rédíò. Àfínjú. Gbogbo èèyàn ló ń gbọ́ Àfínjú. Gbogbo èèyàn ló ń wo Àfínjú. Lórí WhatsApp. Àfínjú. Instagram. Àfínjú. Facebook. Àfínjú. Lórí X. Àfínjú. Lórí YouTube. Àfínjú. Lórí TikTok. Àfínjú. Kí lorúkọ rẹ̀? Àfínjú. Ẹ bá mi pè o. Àfínjú. Rédíò. Àfínjú. Gbogbo èèyàn ló ń gbọ́ Àfínjú. Gbogbo èèyàn ló ń wo Àfínjú. Gbogbo èèyàn ló ń gbọ́ Àfínjú. Gbogbo èèyàn ló ń wo Àfínjú. Rédíò Àfínjú. Rédíò Àfínjú. Rédíò Àfínjú.
Maka akụkọ okwu gbasara ndọrọndọrọ ọchịchị, egwu ma ọ bụ ihe na-eme na Naịjirịa ma ọ bụ ihe na-eme na mba ofesi, omenani, mgbasa ozi, ihe ndị a niile dị na Radio Afinju. N'eziokwu, Radio Afinju bụ nke izizi na radio stations na Osun State. Radio Afinju bụ amaala n'ịgbasa ozi. A beautiful Monday morning to you. I hope you're well. I hope you're doing very great. And I hope you're already out to achieve the things you set out to achieve today, Monday, Ojo Aje. Yes, I hope you have everything all lined up and falling into pleasant places for you this morning. You're welcome to this morning's edition of Understanding Finance. This is where we try to understand everything that has to do with money, because we already know that money is an important part of our lives as humans. There is no how you want to survive, especially in a country like Nigeria, that you are not going to spend money or have some sort of relationship with money. So what are those money concepts, financial concepts, everything you need to know? Is it about saving? Is it about investment? Is it about making profits, or even business? That and many more are the things that we discuss on this show. So in order not to miss out, I would advise you to follow Radio Afinju on all social media platforms. We're on Facebook, X, YouTube, all as Radio Afinju, or you can just join the conversation on our Facebook page. Just search for Radio Afinju, REDIO AFINJU. Let us know your thoughts. Let's know the questions that you have and you need answers to. We'll do our best to answer them all. Or if you would rather join us and listen to our audio stream, you can go to our website at www.afinjufm.com or go to radio.garden, search for Afinju, and you will find us, because we are the only radio station that provides you an impeccable dimension to broadcasting. My name is Pearl Durotoye, and of course, you know, here on Understanding Finance, I don't do the show alone. I have with me once again a chartered accountant with whom together we talk about finance, and he shares from the knowledge that he has. He shares with me, he shares with you, our listeners, as well, so that we can get our money right and get our finance in order. Before we go into what we have for this morning, Mr. Omokorede Agiri, good morning to you, sir.
Hey, darling. Good morning, and hi, everyone. Yeah, sometime last week we were on this program, and I want to believe that whatever we of course, there's no way we can, fully exhaust the topics on finance. So
truly,
I want to believe that our last program you must have gotten one form of information or the other. So
Oh, yes.
thank you once again on this program, Understanding Finance.
Yeah, I'm not even going to lie. Last week was fantastic. And I'm sure today's topic of discussion would not be anything short of great as well. So we'll go on a very short break now. And when we come back, I hope you will be seated because it is time to talk of finance. It is time to talk about money and the things that make the world go round. Don't go anywhere. Still Understanding Finance on Radio Afinju. Okay, you're welcome back to the show. It's still Understanding Finance on Radio Afinjo. In case you're just joining, my name is Pearl, and with me this morning once again is Omokorede Agiri, a chartered accountant, and together we are discussing several concepts in the world of finance. Last week we talked about mistakes people make in personal savings, right?
Yes.
Common mistakes people make when they are trying to save money, and trust me, it was really insightful and enlightening. And today as well, I am sure there will be something for you to hold on to, because it is a topic that we've tried to touch in the previous weeks, but like Mr. Agiri said, it's a very broad topic. It's not something to exhaust in one day or two. So today again, we're going to be discussing one of such topics, which is the scopes of finance. I think we discussed the personal finance, right? So now we are going to be talking about that and even other scopes of finance. So over to you.
Thank you, Radio Jam. Thank you very much. Good morning once again, my fellow, our fans. My name is Omokorede. Over the past few weeks, we've been trying to break down into bits what finance is all about, and finance has scope. It has it has three broad scopes. Number one is personal finance. Of course, if you can look at it, before we can say there is a larger community, we all come from one home or the other. So that is why personal finance is coming as number one. And then the second one is corporate finance, before we move on to the final one, which is government finance. So today we'll be talking about corporate finance. Shortly before we move on, let's have a quick recap of what we did last week, which is
mistakes.
The common mistakes that debars achieving personal savings or goals. We talked about lack of a budget. We talked about impulse spending. What is lack of budget? Our inability to put down what we want to achieve into black and white. Most people will rely on the fact that my brain is sharp, forgetting that at times things quickly erode our mindset when we are touched by emotion or the other. So we fail to write it down, having a budget of the expected income and how you intend to spend it. And impulse spending is something you don't plan for, unexpected expenses, and our ability to even if at all the unexpected happen, you should be able to rank it. Is it something that is quite necessary at that moment? If not, why don't you just overlook it? So then we talk about lifestyle inflation, self-induced inflation, in the sense that the moment I'll just use more money, more problem. The moment you have more money, you may decide to create, or you might, unaware, create a problem for yourself. You wouldn't want to patronize all those common people that you were used to when you don't have where you have virtually little with you.
Because your level has changed.
Because your level has changed. And then you talk about debt accumulation, no defined savings goal, neglecting to prepare for emergencies. Then we have a peer pressure and social spending. and lack of financial literacy, and then poor financial discipline, possibly overestimate, and as well as overestimating future income, keeping our savings too accessible, where you can, when you say you have a piggy bank and the moment you needed, you are pressed or you are pushed, leave that. Shebi, it's my money, I can spend it the way I want. You need to sit down, look at it, question yourself. My spending, does it really necessitate? Was it necessary? Why I made so expenditure and all those things? Is there a way you can avert it so that it won't reoccur in the nearest future? And even if I thought it wants to reoccur in the nearest future, how do you intend to, outmaneuver it and then move on? So let's move over to today's topic, which is corporate finance. We all know finances, how to raise money, manage money, as well as, invest the money. Now, corporate finance is a branch of finance that is concerned with how corporations is able to raise capital, money to start up a business. How do they do that? Even if I thought they're able to raise the money, how do they allocate it? How do they manage the risk that is involved in running the business? And eventually, what is going to be the return value to the promoters, which most people call shareholders, the promoters of a company? And what is the aim, the major aim of an organization is profit maximization. What do they mean by profit maximization? If I'm investing a certain sum of money into a business, I must have had, there's one thing they call return on investment or return on capital employed. But I think return on investment is more popular. Yeah. Return on investment, ROI. Right. So if I should be able to say I want to invest a 10 million naira into a business, there are so many places I can invest the money into. I might decide to go and buy a government bond. I might decide to go and go into properties, properties, or I might decide to even invest in shares. Now, if I fail to do those three that I mentioned, and now coming to you as a company, I want to invest in you, I will have weighed the cost, the likely benefits I'm supposed to gain from those three options before coming to you. Now, let's say, for example, in government debentures or government bonds, let's say it's 10%. And then if I might even decide to even leave it in the bank. Of course, the bank rate is, not too enterprising. But at least one believe that it's going to be very, very safe there. So yeah. If I'm coming to you, I'll have weighed the option I'll see in government bond, shares, as well as other option. Now, if I'm coming to you, I might decide to come and negotiate with you. Okay, fine. Can you give me a 10 or 15% return on investment? Automatically, what that translates into, if we are eventually agreed on a 12 or 15% investment, if I'm investing 10 million naira with you, definitely you'll be giving me at the end of the year a 1.2 million naira as return on my investment plus my investment. That is if I want to pull out my initial investment with it. So they have that. So that is the concept behind the profit maximization. How are you able to return value to the promoters of the organization, to the shareholders of the organization? So, and then when you are talking about corporate finance, it involves strategic decisions. Yeah, strategic decisions in the sense that when you say something is strategic, it's a plan that you must it's a future plan. When you say something is a future plan, it's long-term investment, long-term plan. Now, if there is this maxim in Chinese that says that if as an investor, if you are planning for a short-term return, if you are planning a short-term investment, you should invest in flowers. If it is medium term, you invest in trees. But if it's long term, you invest in people. Now, when you look at that, it's that sentence clearly talks a lot about what finance should be. Yeah, of course, most people, how do you invest in people? If you see investing in people as your own long-term investment, of course, there is going to be a way. Whatever you sow into the public, it will always come back to you in multiple folds.
Sure.
You understand? So let's quickly move away from that. So it involves both strategic decision and day-to-day operations. Yeah, strategic, long-term investment, and then fund mixing. Fund mixing is all about every corporate organization has one thing they call gearing. Yeah, gearing is the mixture of ordinary shares and debt. Debt. What do they mean by debt? Debt is when you go outside to get debentures and bonds. Yeah, there is one thing they call capital structure. Yeah, the capital structure still talks about the fund mixing. Now, if I'm investing, if I'm floating a company, for example, now, is it going to be 100% financed by me? Yeah, if it's 100% financed by me, then definitely there's no mixture there. There's no gearing there. But it is low geared. Now, but if it's like if I'm financing it by, let's say, 30%, from my own personal finance, and then I go outside to go and get loan from people, so that means 70% of it is debt. My personal investment, then debt from outside, getting loan from people. That company is termed as highly geared.
Okay.
Now, the thing is, one funny thing about gearing is no matter whether the company is making profit or loss, whether the company is making, it's even better when the company is making profit, because those debts that was acquired, in floating the company, in financing the operations of the company, those debts, the whatever percentage you might have agreed before you go outside to get those debts, will be paid whether the company is making profit or not. Whether it is making profit or not. Now, the beautiful aspect of it is that if you are, as an investor, whatever profit is coming to that organization solely belongs to you. And then you have to just look for a way to make sure that you're able to retain part of that profit for the operations of that organization in the following year, which is what we call working capital.
Okay.
Yeah, that's what we call working. That's the day-to-day financial operations. That's what we call working capital, as well as liquidity. The moment you provide liquidity, we talked about liquidity the other time, that I pushed to you on that. So the moment there is free money in the circulation, you understand, in the operations rather, it will be easier for such an organization to, whatever expansion objective they have, it will be easier for them to expand, or possibly push money into running the affairs of that organization. So in essence, corporate finance is, where do we get the money, how do we use it, and how do we maximize value as in return value to the promoters or the shareholder. So the objectives now of corporate finance, it's in what we said: maximizing shareholders' wealth, profitability, optimal capital utilization, and the risk management. Something about capital utilization is, we all know capital is money.
Yeah.
Yeah. How do you utilize it in the most optimal way, the most optimal function. Capital utilization. Okay, let's move over to let's start from the maximizing shareholders' wealth. Now, maximizing shareholders' wealth is not about profit making alone. Yeah, there's a way they structure the capital of an organized company. We have ordinary shareholders, we have preference shareholders, we have debentures, we have bonds, government bonds and debentures. We have some other means of raising capital, but those are the 4 key areas in which an organization can, get that. Now, if you say you are going outside to source for fund from, these third party, they must be able to believe in your aims and objectives.
Yeah,
they must
the
be able
vision
to
of the
the vision of the organization, and they must be able to see reason why they have to borrow you money or why they have to invest in that. And how do you do that? It's by presenting a clear and clean financial report.
Okay.
That will be easily understandable. Yeah, we're still going to get to the financial statement and how to present it in such a way that it will be clear to them. And how do we say a financial report is? It's your first brochure. It's what you introduce to them. From there, when they see it, they'll be able to calculate some ratios that they feel they need most. Now, when you see a financial report, they will we have what they call stakeholders. Stakeholders are quite different from shareholders.
Okay.
Yes. Stakeholders are those who believe, those who are working with. As we are working in Afiju now, we are stakeholders.
Yeah.
Apart from the fact that we are employee, and we are stakeholders because we need to see whether our efforts is actually adding value to this organization. And then peradventure, when we see there is a boost in the financial base and the revenue base of the organization, we can actually use that to negotiate with the management. You need to add power now. Power now. So that's why we call ourselves stakeholder. Now, the financiers of this organization, they are equally stakeholders. The tax authority, they are stakeholders. The tax authorities, they are stakeholders. Now, how do you mean we are into trading? We might be needing what we call creditors, trade creditors. Now, if you say we want to get goods on credit from those trade creditors, they are equally stakeholders. And how will they be able to, see through our prospects as a company is by getting hold of the financial reports of this organization. They also have a ratio that they're going to calculate the moment they see the financial report, and then once they see the required ratio, I think if they are quite good with that, they're satisfied with that, and they will go ahead, selling goods to us on credit and all those things. So when I say maximizing shareholders' wealth, I was talking about the ordinary share capital, preference share capital, and all those things. Now, if we talked about the financial mix the other time, and then the financial mix. One thing about the ordinary shareholders, they're actually the original owners of that organization. Now, the preference shareholders, they are like debenture holders. The moment they are buying it, they will have agreed on certain percentage of, certain percentage on their investment. So, when you see a much more structured company, you see something like 7% preference shareholders. The moment, maybe one of these days I'm going to get a soft copy of the financial report of a bank.
Okay.
it's very easy. You see, 7% preference shareholders, 10% preference shareholders, 15%, all those things. Now, the thing is, those category of preference shareholding can be issued or can be issued in the same organization. It depends on negotiating skills. Now, when I said 7%, 7.5% preference shareholding, it's like if I'm investing 10 million naira with you, for example. Now, let me say 20 million naira with you, for example. Now, the thing is, that 7.5% of my 20 million naira is what will be paid to me at the end of the year, whether the company makes profit or not. You get?
Yeah.
Now, that also goes along with the debenture holders as well as all the government bonds. You understand? So, when you look at that, there is this. Okay, before we move on, Sha, I will quickly touch it before we round up for the day. So, when you say maximizing shareholders' wealth, it's all about giving positive return back to the promoters, and then the funnest part is that they appear to bear the brunt of the organization if the organization eventually does not fails to
live up to
expectation and all those. Now, that's the reason why they say that all profit also must be to them. But for a wiser, for wiser shareholders, the moment they make profit, they will decide to retain part of it for the smooth running of the organization for the following year, and while they pay themselves certain return as dividend. Yeah, that's where dividends comes in. They return part of it as they pay themselves dividend on their shares. They retain part of it for the smooth operation of the organization. And there's one thing we call general reserves as well. It's very, very broad. Now, profitability and sustainability. As an organization, if you are coming to me, you want to invest in me, I have to just make sure that every input, every action of mine for every blessed day is how to make sure that there is profitability. How I engage myself in the most efficient way to make sure that we continue to enjoy continual patronage of our of our target audience. The moment we continue to make patronage of them, the moment we get their continual patronage, it's
the more this business scale up.
Exactly. Once is profit margin and net profit margin. Gross profit margin is having deducted accumulating all expenses and deductions from revenue. That is not all expenses. There are some attributable expenses. Now, if it's a trading company, for example, I can say that there's one thing we call cost of goods sold and cost of goods available for sale. So it is after you have deducted that from the revenue, that's where you get your gross margin. And after your gross margin, you now to achieve something like 25% net profitability. Actually ensures that the business is sustainable. It ensures that the business is in continuum. It ensures that the business is in continuum, and then is still very much in existence. The moment you start making loss, of course, there is no way I think after that, then we have an optimal capital utilization. That's capital utilization. There is this. I'm fighting for how to just present it in such a way that it will be very, very clear. Yeah, we have something we call under trading and over trading.
Okay.
Yeah. Under trading or underutilization of idle funds is where you have more fund at hand. Okay, now when you say you see your when you say you have more cash
in
the bank, without, putting it into efficient use. And how do you put it into efficient use is by making sure that such cash does not stay long in bank. If you are saying you are having much cash in the bank, what is it doing there?
True.
You're actually leaving the cash for the bank to trade with. So you are on the trading. You have to just make sure that if it's a goods producing organization, instead of you holding too much cash in the bank, why don't you use it to purchase materials? Use that fund to negotiate better.
What of a fixed accounts that make better returns when you leave them in the, according to what they say.
Fixed account is, you can't, there's no way you can be an organization and say you want to go and fix your money in a fixed account. It's only, I think the fixed account of a thing is for those who don't know where to turn to when they have excess liquid with them. So rather than just leaving it at that lower interest rate in a savings account, just pick it up. Okay, fine. Of course, I might not be using this money for the next 3 months, so let me just fix it. And you might even decide to collect your interest up front, so that anything would push you to calling for that money before expiration of its this thing. So the option, like I was saying, we have under trading and over trading. So there's no way you can say that I have a brother who the guy has one very big and very large organization here in Osun State. So the other time we were,
I think before we go into the story about your brother, let's call for a break, and then when we come back, you're going to tell us this story, and we'll still talk more on the trading and over trading. This is still Understanding Finance on Radio. Afinju, we'll be right back.
Do you have something that is kept or meant to be kept unknown? This is where secrets are reviewed and desires are uncovered. Welcome to your safe space, Whispers in the Dark, with me, Spicy Honey Drops, and my Radio Bull Classic. With 2 amazing segments, you are assured of a smooth ride.
Do you have a secret you've been afraid to reveal? Confession Night is where you pour out your heart desires, fears, and secrets. Are you ready to ignite the spark in your love life?
On Bedroom Blaze, we explore the art of intimacy, passion, and connection to help you create a more fulfilling and satisfying love life. Right here on Radio Afinju. Join us every Monday, 10 to 11 p.m.
And Wednesday, 9 to 10 p.m. Let's relive the excitement of finding true love, sending special messages to your partner and friends, live on air.
From the shadows to the spotlight. Let's explore the human experience in all its complexity. Stay glued to Whispers in the Dark on Radio Afinju with Spicy Honey Drops for a journey that will leave you breathless.
ìpèníjà pọ̀ láwùjọ, aráàlú ń pàráàrò, wọ́n ń fojú sọ́nà fún ìdàgbàsókè. Bẹ́ẹ̀ olóṣèlú náà ń pé adìyẹ ń làágùn, ìyẹ́ ni ò jẹ́ àrí. Ó wá di dandan ká mójú ajé kò ní sọ, ká ṣàkójọ àwọn ìpèníjà tí ń bẹ láwùjọ, ká tẹ́ pẹpẹ rẹ̀ fáwọn adarí ìjọba kí wọ́n sì sọ ìgbésẹ̀ tí wọ́n ń gbé láti wá ojútùú sí wọn. Èyí ló bí ètò Gbàgede Ọ̀rọ̀. Lórí rédíò Àfinjú, Gbàgede Ọ̀rọ̀ ni ó máa ṣe ìfọ̀rọ̀wérọ̀ láàrin ará ìlú àtàwọn adarí ìjọba. Lórí ètò yìí, a ó máa ṣàtúpalẹ̀ àwọn ìpèníjà àwùjọ. Bẹ́ẹ̀ la sì máa fọ̀rọ̀wérọ̀ pẹ̀lú àwọn ìkàn ìjọba tọ́rọ̀ kàn láti lè mú ìtẹ̀síwájú bá àwùjọ wa. Adédayọ̀ Dẹ́rínú, ọmọ wọn lẹ́sẹ̀ kò jọmọ ó nù, ni ó máa tọ́kùn ètò. Ẹ lè wo rédíò Àfinjú lórí àwọn àtẹ ayélujára Facebook àti YouTube. Bẹ́ẹ̀ lẹ sì lè gbọ́ wa lórí Radio Garden. Rédíò Àfinjú, ìlànà ìgbóhùnsáfẹ́fẹ́ tí ò lábàwọ́n. Gbàgede Ọ̀rọ̀, ètò tó ń yànnàná ohun tó rújú láàrin ará ìlú àtijọba. Kò ṣeé má gbọ́ ni ẹ gbà bẹ́ẹ̀. Gbàgede Ọ̀rọ̀.
For an ultimate entertainment experience. An all-round gist with your Spicy Honey Drops. Don't miss the fun, excitement, and updates on Afinju Arena. Only on Radio Afinju.
Apology for what you say, don't play, or you will learn.
For the best music,
Show me capital business, show me character dickiness, show.
season sport presentation,
Round 10 begins. If they complete this round,
balanced and objective news reportage, and all-round entertainment. Listen to the jewel of the pack of radios in this class. Tune in to Radio Afinju right here in Oshobo, Osun State.
You're welcome back to the show. This is still Understanding Finance on Radio Afinju, where we are demystifying the world of finance, one conversation at a time. And today we'll be talking about a lot of things. Well, we're focusing on the three scopes of finance, and right now we are still on the corporate finance. But before I hand over the baton to Mr. Gary, a quick hello to our Facebook audience. Abiola Boluwatefe is saying, good morning, sir. Happy New Week, sir. So I think that's for you. Esteem Temitayo is also saying good morning to you. So good morning, Abiola. Good morning, Esteem. Thank you for joining the show this morning. It's good to have you here on Understanding Finance. So let's continue with, you were going to tell us a story.
Yeah. Yeah, anytime I have the opportunity of having a chit chat with those investors like that, when I see somebody who has an organization, and is striving to make an impact, I try to just engage him or her, just to see his in depth into how he understands the happenings around him or her. So I just decided to engage him once then. So is like my brother, of course. He had to just, I overheard his conversation because we were actually discussing, so I had to just pick a call. So he made mention of something back then that how can he be, leaving his money lying idly in a bank where it's not possible. He was virtually ranting for over to the person he was, speaking with then. So yeah. I was like, so you guy, I thought you just have some idle cash in the bank. And I say, I can't. How will I have money and put it in the bank? No, it's not possible. That I would rather, push it somewhere where the money can be working for him. So like I was saying the other time about undertrading needs, operating below your potential capacity. Yeah, when you are operating below, you're underutilizing your resources and missing numerous opportunities for growth and profit. And what normally causes it is when you have excessive caution. Right. When you want to expand, maybe you are feeling jittery. No, I don't want to push my money into
or
this.
Or not knowing the right places to push your money into.
No. We are talking about you, as a trading organization now. Okay. Somebody that engages in goods and services and all those things. So when you have excessive cash in, of course, if it even goes personal. Yeah, it goes personal. When you have the fear that with the way things are, with the way the economic situation, there is instability in the policies of government in Nigeria and all those things, and then you might decide to just hold on to it, forgetting the fact that, letting that cash lie idle in the bank, you are not giving room for it to work for you. You are rather working for money, not money working for you. So when you are holding too much idle cash or stock, and then lack of when you say you lack the drive for marketing or innovation, you just fail to look into, and when you are not making very good use of your money, you are probably you are under trading. Now, let's move over to overtrading. Overtrading is the opposite of that. When you are expanding beyond your operations, when you are expanding beyond what your working capital can take you. And what is our working capital? Working capital is the money that you have that can finance the day-to-day activity of that organization. You understand? So the resources that you have, when you talk about cash, stock, credit, when you are expanding beyond what your capacity is, insufficient, and part of the causes are insufficient working capital, you rely heavily on credit sales, and then you rather want to just expand, not minding the fact that whether it's whether you have the capacity to do that. So you are probably just stretching yourself beyond limits. So that those two clearly explains what I'm talking about, optimal capital utilization. Then the risk management. Every business has its potential risk. How are you able to identify yours? You identify the risk. Then, having identified it, how do you intend to outmaneuver whatever challenges those risks poses at you? Is it something that is going to kill your business? Is it something that is just going to shake it up a little bit and see whether you can actually live up to it? Or is it something that, having shaken you can overcome it? And then, even if I thought you've overcome it, how do you intend to capitalize on the lessons learned from those challenges? So even if I thought it's going to happen again, you will have known. Let's quickly talk about all these farmers that are into poultry business. That are related to keep them away. You understand? So they will have known that, they know of course that during wet season, those things might decide to be coming out, to feed on, fester on, those chicken and all those things. Even during dry season, there are other things there are other challenges that come with different weather and different weather. So they will have known over time that if it reaches this time, we need to plan ahead. We need to get the necessary drugs. We need to make sure that their feeding formula is changed. We need to make sure that we have to light up the place and make sure that those birds are kept warm at certain. You understand? So they will have learned a lot over the past. So the risk management is, how do you balance between high returns and financial stability? Now, if you have high returns in a particular period, that doesn't mean that it's going to continue in the next foreseeable future. There will be some period where you will observe your lows as well. Now, in the period of the rainy season, how are you able to save up for those period where you are going to see lower patronage and all those things? The challenges can come at any time. How will you be able to manage it? Then the profit stability, the financial stability is, for means in making sure that the organization keeps on running. How do you make finances available for the stability of that organization? And it's also it's a direct offshoot of capital utilization. The financial stability is when you make high returns, you should be able to separate it that, okay, fine, let this be as my let this portion be for my dividend. Let me keep part of it for the future expansion of the organization. Let me also keep part of it as a general reserve that I can recall, at certain period, maybe to offset or offshoot whatever shortcomings might result into. Now, the first part that you decide to keep as own dividend, that is your own personal ajemono. Then the second one is for the the operations, the working capital for the following year. Now, the general reserve is most times they use it for acquisition of fixed assets, and when you are acquiring fixed assets like that, you are actually planning to expand the production base of that organization, or probably the production base of that organization. So those are the three key areas in which they talk about financial stability. Starting part for yourself, the other part for the two parts for the organization. One is for the smooth running. That smooth running, it covers the electricity that you make, the subscription, acquisition of stocks, something that is just going to make sure that the company functions optimally. Exactly. So, and I think those are 4 objectives of corporate finance. Yeah, those are the 4 objectives of the corporate finance. And then we have some other core areas in corporate finance, which is called capital budgeting.
Okay.
Yeah, that capital budgeting, it's something we can't exhaust in a day. But let me just quickly,
we're actually even running out of time now. So maybe in like 1 minute or 2.
Yeah, capital budgeting talks about investment decision, deals with where to invest company funds.
Okay.
Yeah, it involves evaluating projects and the techniques that are to be used in evaluating the project. So I think we'll...
Okay, maybe we should just stop there.
Yeah.
And then we come next week, we'll continue from that. Okay, thank you so much, Mr. Giri, for that. We've talked about corporate finance. I was thinking we'll be able to we'll do corporate and